But as it relates to the global economy and to where the general direction of stock and bond markets are going, this is likely just to be a blip.
I'm going to push back a little bit on that because, you know, just to use an analogy, when a hurricane's approaching, people will evacuate, even if it doesn't make landfall or it's a tropical depression by the time it gets here. You know, we've wrung our hands repeatedly over financial crises in the past, currency crises and so forth, because they haven't played out the way we thought they were going to. That's not to say that this one won't play out the way we fear it might, right?
I don't think we're actually disagreeing. I think that anything could happen in the next couple of weeks, and we might see a lot of instability. In this interconnected world, you see connections you didn't normally think. You think back to the financial crisis, right? What did a UK bank have to do with people defaulting on mortgages in Texas, right? But we're living in a very interconnected world. There'll be some fallout. But at the end of the day, if we look back a year or two from now, we look at the returns of the various broad markets, it's unlikely to have a big impact.
Mike, let's get over to you. When we're looking at how this all shakes out, we're also seeing a strengthening dollar. How much attention should investors in equities be paying to the currency markets right now?
Well, I think part of the answer is what has been the source of this turmoil, how much has been driven by Fed policy and recent hikes, and then the expectation of further hikes. What does that do for the interest rate backdrop, and that flows through to what investors are willing to pay for equities. The other part of that answer is what is the earnings backdrop for the rest of this year and going into next year, and does that impact financial earnings of our U.S. banks as well as global banks, and as your previous guest mentioned, the interconnectivity of the global financial system. So those are the things that we're thinking about: first, valuation, as well as the earnings backdrop and the drivers of that.
Well, I mean, President Trump wants to improve conditions for our multinational companies, trade-wise. This certainly is not doing that, though.
Well, I think part of, I think if you've watched the president so far, he focuses very much on deals, and he thinks of these as sort of discrete agreements with this country and that country, and he's pointing a pretty powerful bazooka at the global economy. So he's got to be thoughtful about how far he wants to take this gamesmanship. And I think in the end, what his end goal, and this is my speculation, in the end goal, I think, is he's trying to achieve lower tariffs across the globe. Yes, more fair for U.S. companies, multinationals, but also just lower tariffs in general across the globe. And I think ultimately that will lend to stronger global growth over the next couple of years if he's able to achieve that.